From the floor of the CME Group, this is Danny Riley on this Tuesday, June 1st. And you know what? I'm mad as hell, and I'm not going to take it anymore. This thing going on down in the Gulf with BP, people have just, what's going on here? You know, we've got a multi-billion dollar company here, and they're letting oil spill out through all the Gulf, and they're saying that they still don't have a fix for this. You know, it's one thing to have this problem going on, but then not to have some type of fix for it. What's going on? Now, the reason I'm doing this Mad as Hell thing is because there's a little video clip on YouTube called Mad as Hell, and we're suggesting that you go look it up. It's very fitting for what's going on here. As far as what's really going on here, sell it in May and walking away has a new meaning to it this year. It's not just that the markets were up so much over the last couple of months. It's that people decided to take profits, and that's what's going on here. We're kind of back into this thing where the markets are unstable, or they don't have that good fuzzy feel to them. Now, as far as what's going on here today, the markets opened up sharply lower overnight, and they were down 19 handles at one point, and then they opened down about 12 or 13 handles, and they've rallied all the way back to unchanged to higher. Now, the S&P got up to 1093.30, and this desk put out a sell recommendation into that level, 90.91 level, and the S&P sold off down to 1083 and is now 1085. Now, really, you know what's going on here? We're going to tell you what's going on here. People are scared. They're scared that this credit crisis that was raging over the last year and a half is coming back. And in fact, some believe it never even went away, that all this big rally that we've had over the last 14 months is just a bear market bounce, like the one in '89, like the one in 1990, that the markets sold off real hard, they had a big bounce, and then they came storming right back. Now, we don't really know how much lower the market's going to go, and they're acting pretty well today based on a couple of things. One, it's the first day of the month, and of a new month, and out of the last 11 occasions, this particular day has been up 9. So you get all this pre-Globex volume traded before the open. Everybody sells it, and by the time we open up, there is nothing left on the sell side, and you get all this rush to cover. Once that rush to cover is out of the way, the markets sell off. Now, what we're going to see here in the later parts of the afternoon is whether the markets are really made up. If they sell off this afternoon, the statistics going into the first week of June are not good. The first day is okay, but the week as a whole is a negative. It's a down week. So we're thinking we start to go down in the latter parts of the afternoon here. We can see more of this kind of funky downside action going into Wednesday, Thursday, and then we've got Friday, which is the unemployment figure. You know, the big key stories here are the downgrade of Spain last week by the S&P. This may not have had a big effect on Monday's trade. Obviously it didn't, but there was a little hangover effect. And then there is a name for it, but it's the Chinese PMI came out, and it was less than expected, and the markets got hit in Asia and Europe. Now our markets took it in stride, and we've rallied. Now where we're at it right now, we kind of think that the markets are going to struggle a little bit here till later parts of the afternoon, and that's when we're going to find out what they're made of. As far as volumes are concerned, right now we've got about 10,000 big S&Ps and about 1.5 million minis traded, which 410,000 of that came in from Globex. So, you know what we're still seeing here, we're still seeing people kind of dribbling back from the long weekend. And again, you know what? We're going into the summer. This is probably a time when a lot more people, based on the price action of the market, are going to take a leave from this. They got vacations, they got kids getting out of school, you know what, and losing money in the stock market. They may not be on everybody's menu going forward here. You know, as far as the rest of the day, like we said, we're right at a kind of a pivotal level here. If the S&P starts breaking under the 1083 level, down under the 1077 level, we think we're going down to new lows. If we can get back above the 91, 93 level late in the day, we could see the 1077 level, even 11 to 1101 level. But you know, right now, the markets are kind of in a struggle right here. We'll be back tomorrow with another update.